Welcome back to your home of crypto and economic market cycles. In this video, we're going to look at 4 reasons why we're seeing a low on Bitcoin at this present time after the extreme fear has swept through the markets on the back of the Russian invasion of the Ukraine. I don't have any silly jokes for you right now, and you probably don't want to hear them at this point in time, just like you don't want to hear me ask you to like and subscribe to the YouTube channel. Let's dive in. Lately, the news has been churning through the big headlines very quickly. We started with COVID in January, more threats of new variants. Then we've quickly flicked over to Canada and what was going on with the riots and protests. And now we're headed to Russia, where Russia is invading the Ukraine. And all of this negative news isn't affecting the markets as much as I would have expected if we were to be heading into a major, horrific bear market in the markets. As you know, if you follow the channel, I often refer to the wall of worry, reasons to sell a market, especially when it's in a long-term bull market. Now, you might have a different view, a different opinion of the situation, and maybe you might be directly affected by some of these events. But I'll just say early on in the video, we're looking specifically at these events and reflecting on how that is impacting us and our investments and the money side of things. Yes, there is also a personal level to this, but for this channel, I'm looking at this specifically for investing. So with that in mind, let's take a look at the headlines and what's happening next into the markets, and specifically look at the reasons why I think we're seeing a low in Bitcoin at this point in time. Russian troops advance closer to Kiev. We've covered this yesterday on previous videos. And then also the sanctions that are coming through from the US. Essentially, Biden is sanctioning the 4 largest Russian banks that hold more than $1 trillion in assets. That means every asset they have in America will be frozen. And Biden is also putting sanctions against the wealthy Russians that are close to Putin. So essentially, they're calling him the wealthy billionaires. This is going to be an important part of today's video, especially off the back of the extreme fear that's been thrown into the markets. We always look at what is happening at the market opens and the closes. The opens are controlled by the amateurs. It's the amateurs, retail investors flooding into the markets in the morning because they're trying to get out of the markets because they're fearful. Then you have the professionals that are coming to the market and controlling the close. So they're potentially buying up some of these lows. And we're going to specifically look at this on the charts and what you can look for so that you can see this happen in real time. The example is across all markets: cryptocurrency, traditional markets, stock markets, whatever has a chart, and the volume, you can see it on those charts. We're looking at the S&P 500 here. So the SPX, we have the volume, big volume. You can see the open is on the left-hand side and the close is on the right-hand side. We're going to look at this on all of the charts. So professionals close, amateurs open. We're only down about 14% from high to low. It doesn't constitute a bear market yet. And we have plenty of support on the way down with our major support levels at 4,000 and 3,500 points for the S&P. Yes, of course, we will get to crypto, but we need to understand what's going on in the rest of the market as well. So big drop on the open. Obviously, Russia invaded Ukraine before the US markets were open for their following trading days. And you can see the dump off and then the reversal. That is the same for the Dow Jones, and open was lower than the previous day as well, came down for the middle of the day, and then the professionals closed it up a lot higher. Again, there are a lot of support levels on the way down. And if we were to get into a bear market for the Dow Jones, 20%, that's the technical bear market from the all-time high. That brings us down to about 29,500 points, a decent way from where we currently are. NASDAQ, also same deal. It opened on its low, closed on its high. Professionals controlling that close as well on the NASDAQ. It is down 22%, so technically in a bear market. And I say that with, little inverted commas there, because at the end of the day, it doesn't really matter whether it's a technical bear market, a bear market, or a bull. It matters if you're making money in the markets overall. As for crypto, the fear is 27. So this closed up higher than it did yesterday, and it's even higher than where we had the 24th of January lows. So they're a really important point that we've been coming back to. 25th, so that was the data from the 24th, it was at 12 on the fear and greed, and today we're up at 27. So much, much higher than where we were back on the 24th. And I bring that up because it's similar pricing. We had a low of 32,900, so basically on the 33K, And yesterday we had a low of 34,300, about $1,500, close to $1,500 difference there. Now let's look at these reasons that I think we're potentially seeing a low come in at this point. The big one here is the pattern for me. So this is essentially just tape reading what's happening on the bar, looking at the volume, and then putting all these pieces of the language, the puzzle together. We had a relatively big volume day compared to the several months previously. The only day that was higher was the 21st, so that crashed down, and then we had the reversal. We had a higher low. That's also a bullish sign. We had a higher close. Remember, the professionals are controlling the close. We also had a hold of the major 50% level, which was 36,000. We had the major volume, we've got that. And we have the fear and greed, which is much higher than the 24th. So the market has essentially come back to test the lowest point that we have seen since the all-time high. And it has found a lot of strength at that point. So there's a lot holding the market up here. So what do I expect next? I'm looking for these 4 things next. Weekly close above the 50% level. So $40,000 using this current range. Then we also need a consolidation above 41K, as that was the previous levels of support. So we want to get a support resistance flip in the short term. And then all these bigger wheels start to come together. So these are all the short-term pictures looking towards the bigger pictures to come together as well. We're going to watch the 46K resistance, which is way up here. That's where we've been rejected previously. And if we can get above that, that's going to flip us into a short-term bullish market for Bitcoin. The next target is, of course, around $52,000. And I'm looking for 52K for this market to get above, because I think that's when the alts will start to have their relief rallies. Now, it could come sooner. Maybe that comes at the 46, but it tends to happen when Bitcoin is in a relatively strong position compared to where it was previously. So I'd see that as around 46K. If we can get above that, that's going to make the market overall feel a little more bullish, and I think people start to gamble on some of those altcoins. But I'm not saying that that is the overall major fantastic alt season that we expect from what we saw in 2021. I don't think we'll even get one of those big alt seasons at 52, but I think that if we can get to that point and the market is feeling pretty healthy, then we'll probably see some altcoins pop off, whether they're relief rallies or potential long-term moves into their next new highs, yet to be seen. But these are the target prices for Bitcoin that I'm looking for to possibly see some of the altcoins popping off. I always want to ask, what if I'm wrong as well? Because the market doesn't always do what I say it'll do. It has been pretty kind to me lately, but what if I'm wrong? What I would see early on, there's a lot of early warning signs here, is we'll see a failure at 41K, or around that 40,000, 50% level, and then some closes back down in the mid 30s. And so from that point, I might be a little hesitant on buying the dip. And I'll show you what we've already been buying in the fear and greed plan as well. If we are to break down from this current low at 34, I'm almost sure that we will, almost definitely sure that we'll go and see a test of these lows at $28,000 and $29,000. Because at the moment, this is looking relatively good with this volume. So hopefully we do get this move up and test 46K again. But if I'm wrong, I'll know that relatively early. And of course, I'll let you know on the channel here. So make sure you're subscribed and hit that like button as well. As for the Bitcoin purchasing plan using the Fear and Greed Index, it is currently up 10%, $1,800 profit at this point. The last purchases were 22nd, 23rd, 24th, 25th of January. So that was at an average price of around 36,000 USD. So this isn't about buying the absolute low in any market. We're just looking at taking a chunk of the market out of the middle and taking that as profits. If you want a copy of this spreadsheet and to learn more about trading and investing in crypto, make sure you check out the link to Patreon in the top of the description. No lock-in contracts. All you gotta do is click on that, check it out, and join us on Monday mornings for our weekly group call. As for the cryptocurrency markets, total market cap, again, similar sort of base forming here. We had a slightly higher low in my beautiful yellow golden box here, where I'm looking for a base to form. The next higher price that it needs to get through, around that $1.8 trillion of total market cap. So over the last couple of days, we're watching this as a rejection. I was expecting this to start to break through the highs, but this has been an absolute flip and flop on the pricing here. We got rejected, came back down, tested the lower prices at $1.5 trillion, and now we've closed higher again. So I dare say we're going to come back and attempt to test the $1.8 trillion. Same sort of deal. What I'm looking for here for the overall cryptocurrency market caps that we saw on Bitcoin is to get some consolidation first up above that 50% level so that we can then attempt the 2 trillion and the higher prices as well. As an investor, these times are kind of bittersweet because the prices are low, but something bad is going on somewhere else in the world. When the prices are super high, a lot of people are very excited and the greed sets in and everyone is really happy. But if you show any sort of negativity at those all-time highs or very high prices, it usually upsets the people who are getting in very late. So it is a very bittersweet game. At the moment, I think we're seeing a low on Bitcoin. I'm not saying that this is the final exact low of all of this downtrend for Bitcoin, but I do think this could be a reasonable low for a few days or a few weeks. We'll see in time, especially as the market starts to test some of those higher levels. We'll know the strength of this low within a few days to a few weeks. So we have to learn to separate our emotions with what's going on out in the rest of the world to what we're doing in our business. We can address those at some other times, but if we're going to make some informed decisions and emotionally free, then that's what we have to do when it comes to investing. Remember to check out the link to Patreon. Join us on Monday for our weekly group call where we're updating the crypto markets and the real estate cycle. There's also the Ethereum giveaway. Check out the link in the description for that as well. Like and subscribe. I'll see you guys at the next video. Until then, have more fun to get more done.